Welcome to Giving You More Than Numbers, CAS's business support podcast, your go-to resource for practical business advice and expert insights.
So we've spoken about those common year-end challenges, and we've spoken about that, why it's beneficial to make that transition into sort of the cloud sphere. So once people have made that transition and they're now looking after their own records, so they've not opted for whatever reasons to outsource it, what sort of essential records, and let's deal with the essential piece first, must they be keeping? And let's deal this in two parts. For VAT registered businesses first, so what essential records are we expecting as the professionals that they have kept, ideally inside the software, but if not outside?
So I think invoices is the obvious thing. You have to purchase invoices.
Yeah.
Well, purchase invoices and sales invoices from that side. It's worth mentioning as well, at this point, that there is so much digital stuff now online where you don't actually receive invoices. And we get this query all the time. So we couldn't get an invoice. You go on the M6 toll. Okay. They don't give invoices anymore. It's a great example.
Yeah.
So it's important for us to have the logins to those accounts. So all the parking apps are now, because it's all paperless. Yeah. But we can actually retrieve them. So we have to have the logins or they need to be able to put that in themselves. So I think the key ones, and then you've got your payroll records as well. If you're doing your own payroll, that all has to be kept. An important thing is that when you're setting up the invoices on the sales side, okay, that they've set the invoices set up correctly. They have the VAT registration number, the company house, the company number and things on it. So many people just think, oh, we'll just use what we've got without actually doing that. That bit of that receipt is not legally admissible if it hasn't got that VAT. You can't claim the VAT back. So I think that's really important.
And am I right in saying on the sales side, if you've got an inspection and there are numbers, because invoice numbers go sequential, am I right in saying that HMRC question where are the missing numbers?
Well, 100%.
So again, make sure that you're sequential and actually if you're going to void an invoice, credit it rather than just void it. So you create.
Don't delete it out the system. No, definitely.
No, good.
Because that always makes it worse, because then it plants a seed of doubt into the HMRC, which would
Okay. So essential records, then purchase invoices, obviously payroll records, and most payroll records now are electronic in some guise, whether that's inside the software or HMRC basic tools as the alternative. Any other receipts or documentation we should be keeping? I've got a couple of examples which I'll chuck if they don't come up. I'm not trying to catch you out here.
I just want to say it's really, receipts that you're on the hoof and you just pay by card. Not just put it in a folder and leave it in the dashboard of your car or van. But just photograph it straight away. It's done. It's there. It's entered onto the system.
There's also things like mileage records, which are, again, it's all electronic. You can actually just keep a tab of your mileage records as you're going along, which makes life a lot easier if you're going to make a claim for your mileage. It's just a number of, I actually say to clients, I'd prefer you to put everything on the system.
And let you decide.
And make us decide, because we can't decide on something we don't know about. And they think, I see what you mean. Well, it does mean occasionally we have a good laugh because they come up with something that's clearly not a business experience, but they don't know. And that's where our expertise comes and your expertise comes into play. And say, right, okay. Now this is something.
I think this is critical when you're doing VAT returns. Because you're saying, you can't get the VAT. They go, why not? Well, you don't have a receipt or it's not a VAT receipt. So what
but they're a national company. So we know the VAT. No.
So I would say to people, really, if you have receipts, make sure you remember, it's not like a
credit card receipt is not acceptable for that.
So the biggest problem area for us is CIS. Because
so construction industry schemes, so those operating over in construction and
and a lot of people don't realise that they have to be in the scheme. And that's the biggest problem that we get. And they go about there, they give us all the invoices and things, and then we find out after the event and say, well, you should have deducted tax from that. Oh, well, we didn't know. So we try to take that back in hand. A lot of them don't understand. And, I'm going to knock the government slightly here. Well, not just the government, but It is a very complicated system.
It's complicated.
And for builders and people who are in construction, who've not necessarily got those skills, they're brilliant at building houses and stuff like that, but they're not so good at paperwork. It's an absolute nightmare. And so that's an area where they definitely need to be on
the subcontractors. So you're meant to check them out and be able to say, right, this is the correct tax to do that.
Yeah.
And sometimes you wonder, how, where did you get that?
Yeah.
Or, well, I thought that was the figure. No, you're meant to check on.
Yeah, that's it. The number of times.
A real good problem.
We have a client that he uses loads of subcontractors, and some of them he takes a bit of a punt on, and he tells them, and they ring up HMRC and they register for self-employment. Perfect. Then when you verify them, 30% deduction rather than 20.
Yeah.
Well, he's registered, but has he told them he's a subcontractor? Yeah. So there is a little tip.
Yeah.
If you're going to work in construction, tell HMRC, I am working in the CIS scheme, just to protect yourselves, and because we don't want to keep 30%. And whilst it comes back at the end, it's a big challenge. I just want to pick up a couple of the apps that I mentioned. I'm going to chuck a document at you that I think is valuable to keep inside the system. But what mileage app? Because I think that's a big part now for those that have decided that running a company car is not the most tax efficient way for them.
Yeah.
So let's claim the mileage. So is there any apps that you guys recommend? I mean, I know what ones we kind of encourage our guys that use mileage for Trip Catcher on MyLocal.
That's all I was going to say.
Trip Catcher because it integrates with Xero. MyLocal, I think, integrates with QuickBooks.
Yeah. So Trip Catcher is the one that we use internally, and I guess that's
so cost effective. I mean, it's like 15 quid a year for an individual. It's peanuts to have those accurate records that we spoke about. Yeah. And the other document that we try and get at the start, and it comes back to more fixed assets, is if they're buying it on HP, we try and ask for a copy of the HP agreement that we store against the bill. Yeah. So that actually, when it comes to you doing your job at year end and accruing for current year liability and more than 1 year, you're able to see that document. So we consider that's good as important as you guys from a recent perspective.
Loan agreements as well.
Yeah.
The same thing. There's a real, nothing we can do about it now, but during COVID, obviously a lot of people got the bounce back loan, and there is no paperwork. You ask anybody and we've never had anything. Yeah. And that one is a problem. I mean, we've obviously got the calculator.
I was going to say it's quite easy because everybody was lent it. C-bill's slightly different, but the bounce back 2.5%.
But even so, from a compliance point of view, we should be checking that balance because we might not know that they've missed a payment or they've taken a holiday or whatever that might be.
Obviously, we've spoken about then the important document, handling those receipts and expenses. And I think receipts we've kind of already covered in terms of using a Dext or an apron. But what about expenses that, let's call them out of pocket expenses, that they've not got a company card or they've not got it on credit through the business? How should businesses look after and manage that expenses piece in your, because of course there's still potential.
There's various ways, Paul.
We're just trying to, if you like, give our viewer and listener some ideas on what should they be putting in place if they want to come and work with you guys to make that job really easy.
I mean, really, there's certain providers like that will give cards to employees that the employer pays, and on that all the expenditure will be on. I'm sure it's similar with the capturing with the receipt. Back it up. Would be the best way. I know some that have to claim on expenses and attach all to the back of an expense, but I have to give, a card of some sort. And there will be, as usual, a credit limit. To a certain point.
I mean, we do have a habit, rightly or wrongly, to ask for personal statements. Simply because, I mean, I do it. I spend a lot of money on a personal card, which is business expenses. So I'm very lucky. I've got a PA that will sort through it all for me and do it. But that often will get missed by people because you pay it out your own personal account. And yes, you might not want to share that with your accountant or your bookkeeper.
Yeah.
But actually, I would say to people, you know, we're not going to share this stuff,
Or judge you.
or judge you. And there's probably expenses there that you might not be claiming.
Either you don't think
that you could do. And the way that we then treat it with something called a director's loan account, which we're able to actually put those expenses again, to allow you to take that money back out in the future.
Yeah. And
ideally, sorry, Paul, I think it's ideally it should go through the business. Because then you capture everything. I understand where John is coming from, that yes, we do. It's just sometimes we forget, and then you've filed and you're thinking, oh, I've spent such and such on my person.
Yeah.
I think I'm just being a bit rear-ended because I know what people are like.
Yeah. Absolutely.
And you do it, especially if you've got a really small company. You know, you're out there. Oh, you picked the wrong card out. You know,
yes, that's the
I think that is the issue. That's the issue. You picked the wrong card out.
I've confessed I've done that a couple of times. I paid for it on the wrong card again.
Yeah. But it works the other way. If you accidentally pay for something on the business because you've forgotten your personal cards, again, the way you've just mentioned about actually charging it against your direct loan account, this would just be the same, and it would just be classed then as money being withdrawn from the business. It's more sort of because we do this all day, every day. There are a couple of fantastic apps out there, Pleo being the best, where they get preloaded. So it's that preloaded card that you were talking about, Andy, and they can pay for their business expenses and capture the receipt. But they can also get reimbursed on that if they've paid for it irrespectively or retrospectively. So for those that have that challenge, and probably slightly bigger businesses rather than those owner managed, where it's a little bit easier, is look at some of these cards that can help manage the expenses process and take away the Excel spreadsheet with all the receipts attached to the back. Yeah. But if you're not keen to give people a card for whatever reason, have a look at some, probably there's Expensify or Xero have got expenses, which will capture and build everything in to technically what is an expense report held in the system that you can then reimburse as you would normally, either through payroll or as a payment at the bank.
A lot of these cards as well, to encourage you to use them, offer rewards as well. So there is a lot of them out there where if you put all your expenditure on those cards, you will get a reward back the other side. And
I am a massive advocate for that. We use Capital on Tap, and I am giving a plug 1% back for nothing. And if you pay it off in full, and typically I've had Capital on Tap now for the 7 years that we've been trading properly, and I worked out I've had just over £6,000 in free money.
That's great.
So actually, any cashback card or reward card is really beneficial. Really, really beneficial.
No, Paul, we're slightly going to tangent, but going back to expenses is with cloud, and if once you got a bit more experience, it's like Teleroot and there are other providers available, but that allows business owners to sort of put money into a certain account. They authorize the invoice and the payment will be made automatically.
Again, slightly bigger businesses. It is slightly bigger businesses that have got an accounts payable team or an outsourced team that prep it, and then someone else pays it. So we're starting to actually quite apt, Andy. You've moved into where I kind of thought would be useful to explore next. So we're capturing our records and we're managing and capturing expenses to a point. So managing cash flow, both during the year, which I think we kind of touched on, but it'd be good to dig a little bit deeper, but during that year end piece, because cash flow is critical for some of the advisory pieces that I know you two guys can do. So if we can kind of pick that up as two parts, how do we support and manage clients with cash flow during the year? And then how do we help them manage, I'm going to call it tax planning, with a cash flow in mind? And so whichever one wants to.
Okay. So throughout the year, what could I say for, we will always keep an eye on where you are. We suggest you keep 3 to 6 months in your account to be able to pay the bills, pay the wages and stuff like
3 months of operating costs.
Yeah, operating costs, or 3 to 6 months, depending on what those operating costs look like. That generally is a good place to be, because if you're struggling, then you know that you might be having some difficulties in the business. And it is about putting things on cards, because you can actually manage it with monthly payments.
Yeah.
So the more things that you get on a monthly basis, the better. So we go cardless, which is but again, most of our clients are on a monthly retainer, and we would doesn't matter what your business is, we would suggest if you can do a monthly retainer, it helps your cash flow massively, because you know where you are. So during the year, it means you no surprises.
Yeah, that's it. We haven't got that big year-end accountant's bill. And you've paid it.
And don't get me wrong, there are certain things which will crop up. You know, you get a recruitment bill or something like that, they won't let you spread that.
Yeah.
But there are certain things that come up. But generally speaking, you can manage the majority of things.
I think you're quite right, John, but I think one of the biggest things is making sure you got your VAT bill. Yeah. And they're ready for you.
Yeah.
Because so many people forget and they go, I need that new machine or whatever, and then spend the money thinking, no, what about your VAT?
Yeah. So do you encourage clients to have a second bank account?
I do. Yeah. Where I know there's a bit of difficulty, I advise them to have a second account.
We're massively keen on either as many savings accounts and make that money work for you, for VAT, for POE, which corporation tax, but those that are perhaps not that savvy, we talk to them about moving to one of the challenger banks, a Starling or a Monzo, that you can have the pots. Yeah. So from an account perspective, we don't see anything, but they're able to automatically set money that says, if I receive an invoice for 1,200 quid, the system will automatically move the £200 VAT into the VAT pot. And that, I think, is a great way, because people, and we've got a client I only spoke to this morning that said, I can look and see what my disposable, what I've got to go and spend on a little bit more advertising, because I know I've met my other commitments.
And the thing is, I think it goes back to knowing your client, because there are some who are very good at what they do, but cash flow maybe not one of their greatest assets. Well, but and that's where you always can advise, and especially suggest. I've got one client that has, as he said, if I rightly say, Paul, a VAT on corporation tax, so he knows he has them.
And the way we sell that to people, by saying to them, actually, you're going to get a big benefit, because we would tend to suggest to people they keep slightly more than they're going to need in that account. Yeah. And then when they get to the end, I might say, Paul, if you do it this way, it's going to be great, because you're going to get to the end of the year and you can have enough money for a holiday, because it's still sitting in the account, because we're over egging along the way. On a personal side, there's a number of bank accounts. I use one where they transfer money across depending on what your balance is. And I've just paid for a weekend in Paris off the back of that. So there's little things like that which actually will benefit our clients,
and that's
personally, and that. Again, it's the carrot and the stick. Yeah. See, that scenario, you give them this carrot, then there's something good at the end of this.
That's it.
And that's the way to kind of get people to do it.
But that's that proactive accountant actually offering tangible advice instead of just, here's the bill.
Yeah.
Just on that monthly cash flow piece, there's lots of businesses that will look and try and run their business off their bank balance. So when you get that monthly and quarterly reviews, that cash flow forecasting of actually, yes, you might have £100,000 in the bank, very nice, but actually when we then start to predict this over the next 3 months, you've got a payroll bill, a VAT bill, and your corporation tax is due. Well, that's suddenly now left you only with £22,000. And I think that for us, when we're working with those clients and those bookkeeping sort of jobs day to day, that's the biggest thing that we get asked. What have I got left? So I guess where I'm at is, do you offer that level of support to do that, if you like, future prediction?
Yeah, I mean, we do it 100%, and that's why we make sure because corporation tax is the one that's harder to actually keep account of. Which one we suggest you do it monthly. Yeah, but all of the POCs, we will all call them POCs or whatever. Yeah, we will actually do an analysis. So if I'm going to a quarterly meeting, I'm thinking of a client I'm going to on Monday, I will make an adjustment for the corporation tax for the director's loan account, because often people spend and then take the dividend at the end of the year. So it's just the way it works. So all of those type of things, we definitely make a conscious effort to be able to support them, to be able to.
I guess it's being informed, isn't it? It's those informed decisions that then lend us nicely in towards that cash flow and how do I manage it for year end purposes. It's built, I guess, during the year, building almost a year end pot to allow the accountants, to allow you guys to then look and go, we can tangibly do and afford to do this. And there then is a mitigation on the tax liability.
This is why I'm here today. This is the wonderful benefit of cloud accounting, because you have today's information where if you got somebody that brings their manual record, you're already out of luck. You're out of date.
Yeah. The other thing I'd add at this point is, it also, we can earn you money, because if you're perhaps doing relatively well, there's obviously, you've got surplus. There's a number of banks now out there where you can actually split your funds between different rates of interest. Yeah. So you could actually be earning money on that corporation tax that you've been saving.
That is 9 months away.
Which is 9 months away, and be getting a better return than just keeping it in a current account where you're earning nothing, basically. So all of those kind of planning things are things that we would go to our clients with and say, here's a suggestion. Why don't you do that? We notice that. We also warn people about if they go over the 85,000 in a bank. There's got a number of clients, and I say, you've got 130,000. I'm not expecting your bank to go bust, but you need to know you only got 85,000 protected.
The thing is, John, I think as well as that is being aware of the group of what banks are within the group, because it's the group. It's not just one particular bit. So if you got 3 banks and they're in one group, you just got one.
And we're not here to beat up the high street bank, no, by any stretch, because they have a place, but I think they are a poor offering in today's business climate for business in terms of cost and interest.
Yeah, I think in most businesses, if you're still getting cash in, it's a different story, because the post office, which is where you end up having to pay into, do charge quite a lot of money to actually get it in. But most people don't. The cash is it's a lot less used these days. So completely agree.
Yeah, I think as well as that, for people viewing this podcast, it's not a difficult thing. There are certain providers out there that you just need to register once, do your money laundering checks, and then you have access to a whole pile of banks and societies and whatever. And then they can break it down to whether it's instant 30 days, 6 months, a year, 2 years, whatever, and you get a higher rate of interest.
That's it. And I think, again, the message is absolutely coming across. Work with proactive advisors, bookkeepers and accountants. They will make your money work better for you in whatever guise that looks like.
Paul, I had an example the other day from another accountant where they went to see a potential client and they had 1 million sitting in their current account.
Wow.
Not earning anything.
No, since you want to worry. I know what I earn on my few pounds, never mind that sort of money. But again, it's, if you don't know and it's not your forte in business, you're just going to leave it there. And so we've done all of this stuff now. We're on cloud. We're keeping really good records. We're doing a little bit of cash saving. What do you now need the business owners to do, prepare, bring when they meet you for that pre-year end meeting? So what extra can they do, if anything? Because it's all right, us as and you as the professionals taking it to them, but what do we need back from them to make the whole cycle work?
So I think for the pre-year end meeting, I may have said this already in this, but we do quarterly meetings. Yeah. So we look at this month 9 meeting, which you were talking about. For that meeting, it's really having then a good idea on what's going to be happening for the final 3 months of the year, because we've got the opportunity to suggest some tax planning for them, whether that be paying into a pension, actually buying some assets, or a couple of other things that we could possibly do. Always thinking about the cash. But at that particular meeting, the other thing I tend to do as well is that they hold stock. I know I won't get that stock take at that point, but I need to have an idea of what that stock looks like, because that adjustment that is made at the end of the year, and even if it's on cloud, unless you've got a stock add-on, which you can probably recommend a couple to people in a minute, I'll let you do that. Okay. Unless you've got a stock add-on, that can be fundamentally different between what the result you think is going to get and what you actually finally get.
If they get delivery the last day of the year.
Yeah. And then the whole thing, all the planning that you might do is a complete waste of time just because of one number.
And the thing, John, going back to what we were talking about earlier, is do they need that level of stock? Because that's all that cash laid on. Do you actually need it? Is it worth a review maybe to sort of come down and have it in cash flow?
And John, the stock system that we recommend is one called Stock and Buy, but it does drop shipping. It does loads of things. And again, these are not necessarily plugs, but what it's saying is that there is a whole ecosystem that will take and make life really easy.
Because come back, I think another thing that which John and I will do is depreciation. Because there's so many clients who don't work out their depreciation.
So depreciation, they buy something for 10 grand, but in 2 years' time, it's not worth 10 grand. So you're writing as a cost.
It's really a cost of using that asset. So it's like, you can't tell me that you buy a car for 40,000 and in 5 years' time, it's still 40,000. It's sort of using that time to reduce the value of the...
But I'm right in saying that not allowable
it's not allowable. And this is where we got a difference. We got accounting and tax standards, which are completely different. And actually, it is a good point, because a lot of our clients don't understand the difference between the two, and they think the number they see at the end is what their tax will be paid on, and then we go and change it, and they think, well, why is that not right? And those, because there are certain things, unfortunately, are disallowable. We're not allowed to claim entertainer, for example, and depreciation. So they all get added back. But on the other hand, there are capital allowances that can be claimed. And if you're into research and development, there's things like that can be added in as well. So it works both ways, but that's our job. So,
and something that, an accountant that, I used to work with, they've retired. They used to ask when their clients were coming in for that pre-year end, they were really proactive as an accountancy firm. I mean, they were way ahead of the time. This is like 15, 16 years ago. They said, what do you want as the business owner for the next 12 months? Because that helps shape some of that conversation. It's all right saying, well, actually, I'd like a nice big pay rise next year. Or you start thinking, well, yes, they might have the reserves this year, but actually, do we want to put it then into that pension or buy an asset if you want to reward yourself next year?
I had a meeting on Monday with a client. I had the financial advisor on the call as well. So it was a call between the three of us. Basically, it's a travel company. They're doing exceptionally well at the moment, but they can see that market will drop in 2 years' time. So all the planning that we're actually doing is to maximize or minimize the tax at the moment, but also make sure they've got enough to be able to deal with later on. That's what we do, and that's why we will always ask some very personal questions to you as a client. And those that get it then understand. The pain in the neck clients, if I'm totally honest, are those that do not come out with all the information. And we've got a tax inquiry at the moment where we've done everything in good faith and then found out that actually we weren't told all the information that's actually there. And that is part of the problem. And that is educating you guys as clients to actually just be honest with us. We are not HMRC. They're not against you. We're actually for you, and we will try really, really hard to maximise what you can.
And I guess just to round up the podcast, I'm just going to ask if either of you or both of you can share a success story where really good preparation has made a huge difference to a business, whether that might be a struggling business, that preparation is not necessarily year end, but it's that monthly support, or whether it's just a year end piece that you've done with somebody that's made a huge impact on them and their business. Because I just think sometimes those stories are better.
I mean, it goes back to what John and I keep on saying with tax planning. I had a client and sat down with him in month 9 and again said, this is your corporation tax. Looked at various things and we managed to reduce at his year end his corporation tax by £19,000.
Wow.
But that was pure by planning and looking at various matters, really. Yeah.
I think I will use an example, a bit of a longer term example, because it's not always the 1 year.
Is it?
Yeah. It's sometimes long. So there's a client I started working, a social media agency that I started working with very early on, okay, and worked with them for 7 years. And by adopting cloud accounting, by giving good tax support all the way through, they always knew what their plan was, and that was to sell out at 7 years. So all of the things that we did with them, okay, were all around what they were going to do. And they were able to sell that business at year 7, for, millions of pounds, which has allowed them to go on to their next venture and stuff like that. So I will always say to clients, my first question to a new client is, what do you want to achieve? Yeah. Start there and then we work backwards. Yeah. Because if we don't know what you want to achieve, there's no way to go. But to achieve that, you need good records. You need to have a proactive accountant working with you. You need to be honest with us, both because everybody wants things now. They need a short-term, medium-term and long-term plan. If you get that right, you've got the right pots in place, everybody's happy. Yeah.
I can relate to that, John. I had a client, and 5 years, sort of had the sounding board of saying, right, what you want to do, because you're coming up to retirement, what is your plan? And they want to sell the business. So we were able to put them up to cloud, get the information, get the systems in place. And again, they sold for millions. And they now nicely retired.
Fabulous. Right. We're just about done. I've got one question. Well, it's not really a question, but it is a question, if that makes sense. John, to you first. If you could have had one piece of advice when you first started your business connected to year end and that piece, what would it be?
I think for me, it's about getting information. I think the first thing I said, actually, it's about getting information in early. I think, and we're getting there now, but if you don't give information to your accountant early enough, it doesn't give us the opportunity to do the planning that we want to do. So the bit of advice that I would have had is exactly that, and it stays the same. Yeah. And I give that out to every client now.
Fab. Andy, anything?
Totally agree with John. And I would say also is make sure that the information you put into your system is accurate, because the more accurate it is, the quicker you can get things done. And again, tax planning.
Fabulous. Right. Okay. So actually there's a challenge for you, as the viewer and listener. From what you've heard today, which 1 year end preparation tip will you take away and implement this financial year? We'd love you to share this with us on our socials. That's all for today's episode on making year end accounting easier. Thanks to John and Andy for sharing their expertise, and thanks to you for listening. Don't forget to like, subscribe and leave us a review. It'll really help us reach more growing businesses like yours. And if you've got any questions or topics you'd love us to cover, drop us a message on any of our social media channels or email us at info@cas-online.co.uk. Thanks again for listening, and we'll catch you next time on Giving You More Than Numbers, Cass's Business Support Podcast. Thank you.
Thanks for listening to Giving You More Than Numbers. Subscribe for more business insights from Team Cass.